Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday and it's the 21st of December. My name is Russell Shom, Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and I'm just going to bring up the high risk investment warning. I'll keep this on screen. Can I just confirm that you guys can, number one, see me through the camera, number two, see the screen, number three, hear me. Okay, excellent. Thanks, Anna. Morning to everyone. Thank you very much for joining. Hey, Joachim, thanks very much. All right, so this time of the year, obviously, it's very quiet. So we won't have the crypto minute webinar, so we won't have that, and we'll probably go a little shorter over the next few days. So unless there is some sort of burning issue that we need to discuss, what we will do today is discuss the Bank of Japan's decision yesterday to change its defense of the 10-year from 25 basis points to 10-year, 25 basis points to 50 basis points, I beg your pardon. Just bringing up the references, market scope, and trading view. And yeah, understand my bugbear subject. Yeah, well, it's actually it's now coming to fruition, right? So we we knew that this was going to happen. It was not a matter of if, it was a matter of when, and now it's happened. And effectively, what I think Kuroda is doing, there's going to be a change of guard next year. I think in the first quarter, in terms of the Bank of Japan gets a new governor. And I think they're actually trying to move off of that negative rates, which is for the first time in about 21 years, I think. So it's very interesting. What we have here is the NASDAQ. I just want to show you the NASDAQ, the Kopok curve. Okay, that's the first. So we haven't got the cross there. I just want to go through all the major indexes with you just to see where we are with the Kopok. What we do have with the NASDAQ is a reference candle. Okay, so although this month has been quite a harsh month on the NASDAQ, it hasn't negated the fact that we've got a reference candle here. You can see that it's and this is on a monthly basis, so it's fairly significant, right? We've got the lowest low in at least 3 candles as condition 1, and then condition 2, price taking out the reference candle's high, and condition 3 is closing above the reference candle's high. So this is potentially a higher, not a higher trough. It's effectively a trough, and now we can take a look and see if we build off it. Now we may not build, or there was a trough here which failed, but we've got a reference candle to the downside thereafter. So we'll just have to see if we get a downside reference candle. If we don't get the downside reference candle, and we get the crossover on the Kopok, I think those are bullish developments. Let's just take a look at the US 30 now. Okay, so this is I think this is another good-looking chart in terms of the reference candle. Let's just put this in. Just want to get the arrow in. So here is the reference candle. So November, very strong month. Sorry, October, very strong month. November ending also very strong. There's nice through there. A poor month, this which is really because rates are moving upwards, but I think that we may be just seeing a correction there. We'll monitor. The Kopok indicator here as well. It's looking very interesting, isn't it? It's even closer to it's even closer to the normal line. So this is very interesting. I want to bring up just two more. I want to bring up let's bring up three more. Let's bring up the S&P. Let's bring up DAX. Let's bring up FTSE and see what we can make out. So let's bring up SPX next. Okay, again, this is more like it's more like the Nasdaq, I'd suggest, than the Dow, but that's okay. We still got the reference candle in. Okay. The COPOC now, the next part of the puzzle. So all three of the US indices have to push up. Let's actually look at the Russell 2000 as well, which is a small caps index, and let's see what we've got here. I think we need more history, so I'm going to use the actual index itself, which is RUT. Okay, that's the ticker code for the Russell. We're just going to use Trading Views index here. Yeah, that's better. Okay, so we've got a much better history here. And again, this is getting very interesting. It's getting very close to a crossover here. What about the reference candle? What it's in? Is it in? It might be in. Let's just double check here. The low 160, the low 1650, 1641. This is the way that's locked in. Okay, so there's a reference candle, and here's the condition 2-3. So even the Russell's looking pretty good. Let's go through DAX. Okay, and the DAX looking very similar to the Russell and to the Dow. Okay, and we've got a beautiful reference candle here on the DAX. Really strong October and November, and then just December. You know, everyone's talking about the fact that we're not getting a Santa Claus rally. Well, you know, I don't think that's the story. I think the story is actually the reference candles. So we're getting some red amidst some really nice looking reference candles here. And it looks like the DAX is just about to cross over here. It's the 21st. It's going to get very close over the next few days. So I don't see this candle changing much over the next few days, but never say never. And then I think the test comes in for January, which, so we're talking about the Santa rally. Well, let's see how the January effect treats the market. All right, let's take a look at FTSE. This is a slightly different looking chart, actually. The COPOC here is not going to count, which is interesting. So we've got the reference candle, again, a strong October, strong November, then a red December. Take a look where the zero is on the COPOC here. We haven't even hit the zero yet. So should be actually holding up quite nicely here. Okay, that's very interesting. Now, I wanted to show you guys this chart as well, which is the Euro-US dollar. I actually think we can tie this into the discussion we've just had. So what we've got here is the Euro-US dollar on the top. We've got the German 2-year and the US 2-year. We've got the spread between the two notes, the two government notes. And the reason why we want to look at the short-term end of the curve here, because it's reflective of central bank policy, and it shows you that the ECB all of a sudden is really, the market's seeing it as more hawkish than the Fed, which is really just, it's like gobsmacking. I didn't think I'd see that quite some time. Nevertheless, here it is. And if we go through to the weekly chart, you can see how the euro-US dollar is very closely correlated with the spread between the short ends. And the fact of the matter is that if the Fed is looking dovish, well, I take that actually as a bullish sign. Now, the Fed is vehemently denying that it's dovish. The market's not buying it. The market's telling you that, well, we've rotated. It's the ECB that's more dovish than you. So if that's the case, well, then the COPOCs all of a sudden become very interesting indeed as we move into January and February. The last thing on the agenda for today, I want to just show you the Japanese bonds. So let's go through here and bring up the JGBs. I want to go down to the daily here. And you can just see the announcement. And let's just change this to the US dollar Japanese yen. And you can see here's the announcement by Kuroda, and here's the let's even go down to the 4-hourly. So here's the movement from the announcement Kuroda. Here's the US dollar Japanese yen reacting. We take up the yes. But the idea here is we've moved up to 47.5% on the Japanese 10-year. We had the US dollar Japanese yen fall from around about 137. We're trading at 131.80. And this was actually a managed move. The reason that it's a managed move is because they effectively, we just bring in an arrow here. Just looking for a right-hand arrow. This one. They effectively moved from this level, 25, and now they're defending 50. So the obvious question is, well, what happens if they didn't announce that 50 was their level of defense? What happens if they announced, well, we're going to just let the 10-year float? Imagine they said that. Then who knows where the US dollar would have started? Would have been in free fall. And that would have been a disaster. So there is an element of management. So although the Bank of Japan, I think, in my view, have really been unfairly influencing the bond market and the US dollar Japanese yen, at least now that they are starting to move off of the negative rate sort of regime, they're not doing it irresponsibly. They moved it to 50. I think eventually you're going to see this go, but if they had just whipped it away, like the Swiss National Bank did when they were defending Euro Swissy, it could have been a real disaster. So that's just very interesting. And you can see there's no way that they could have maintained this given the environment we're in. It's just, look how odd this chart looks. I mean, hardly any candlesticks because there's just constant defend, and then you get this spike like this. That's just pure market manipulation right there. But at least was done in a way that one may argue is as responsible as possible. All right, I think that's where we shall leave it for today. We will do another one tomorrow and then another one on Friday. Next week, we'll see how it goes because of the public holidays. If there's any questions, please go ahead and type them in. Any questions? Please go ahead and type those in. All right, we're going to wrap up here, and I shall speak with you guys tomorrow morning. Thanks, guys.